Hey everybody, Kyle Sasser here. It's everybody's favorite time of the month. That's right, real estate market statistics time. These real estate statistics are for Hillsborough County for the month of February 2024. So you're probably wondering, Kyle, you say that this is the February market statistics video, but the report says January. What gives? Well, the truth is January is the most complete numbers that we have. We look at reports after the month has ended. And we do that versus week to week because week to week varies pretty wildly. And basically we combine all those weeks together into 1 month, and that really kind of evens things out and gives us a little more insight into what the market is doing. The other thing to know here is that we compare year to year, not necessarily month to month. So we are really comparing January 2024 to January 2023. Now, the truth is the market has moved pretty significantly in those 12 months, up and down. Normally, the real estate market is on a much slower trend. So in my most recent videos for the last year or two, I have been paying a little bit more attention to the month to month. The reason why we don't usually look at month to month, comparing, say, May to June to July, is that during the course of the year, there's a natural ebb and flow in the real estate cycle. Obviously, in wintertime, with all the holidays and everything going on, real estate usually takes a back seat in most people's lives. So there's usually fewer homes listed, and there's also usually fewer homes that go up for sale. Likewise, it also kind of follows the school year. August is usually pretty quiet because most people are getting settled and ready for the new year. But before that, you will usually see a peak or two compared to previous months towards the spring or beginning of summer as people readjust and get moved for the school year. So month to month can be a little bit misleading. So we usually look at year to year. But like I said, the market has been moving such that I've really kind of had to pay attention to both because we have been on a little bit of an oscillation cycle. So just to recap a little bit, if you've missed the past videos, so basically the story has been for the last few years that we have had a little bit of a price oscillation. The previous peak of the market and the end of the clear trend of an upward trajectory on home prices, that all kind of stopped in June and July of 2022. Since then, we've kind of been on this 6 month back and forth. 6 months of prices going up, 6 months of prices going down. And that seems to be holding true with the current stats, but I do want to kind of tell you what my expectations are for 2024 in the later part of this video. So be sure to stay tuned. Now, a little explanation for median and average. If you remember back to your math class, you know that average is you take, let's say, 5 homes, you add up the sales price, you divide it by 5. That gives you the average. Median sales price is a little bit different though. So the median is basically you take, let's say there are 50 homes that sold. The median is the point at which there is a equal number of homes priced higher as there are priced lower. So it's more of the true midpoint of the market. I typically like to rely a little bit more on the median sales price because historically it does not move around as much as average sales price. Average sales price can be pulled if you have a quirky month where, let's say, there was a hurricane or a large number of very inexpensive homes sold, or a handful of $15 or $20 million homes sell that's really going to yank on that average sales price. Whereas median sales price, it doesn't usually move so much. That said, median sales price has been jumping around more than usual, and that's mostly because that metric is only based on closed sales, and our closed sales are down significantly from where they usually are. So normal month we would sell 900 to 1,000 homes, kind of in the pre-2022 days. We were doing 800 to 1,000 homes. We're down in the 500s now. So with a smaller number of sales, the median sales price is going to bounce around a little bit more. So you kind of have to keep that in mind as you're looking through these numbers. All right, let's dive into these statistics for Hillsborough County. Total number of closed sales was down 15.3% to 874. That is from January 2023's 1,032 homes. Total number of cash sales is up 12.9% from 202 to 228. Median sales price is up 2.5% from 400,000 to 410. And the median percentage of original list price is up 1.2% from 94.8 to 95.9. Median time to contract is up 17.2% from 29 days to 34 days. Just to let you know, that is still very much seller's market territory. We don't really get to a buyer's market until we get to 60-ish days. Total number of new listings is up 5.6% from 1,467 homes to 1,549 homes. And total active inventory is held pretty steady, just a 0.9% change from 2,928 to 2,954. Doom and gloom section, which is foreclosures and short sales, there was a total of 5 foreclosures, and there was 1 short sale. So still no doom and gloom so far as that goes. That's usually more of like a financial, an economic health indicator than a real estate market indicator. Now, I have been paying a little bit more attention to months. The median sales price has been in a slow decline. It had a peak in August 2023 of 445, then it went to 425, then 429, then 425, 430. And 410 in 2024. This kind of follows what happened in 2023 with the real quiet period we had after June, July 2022 peak. The interesting thing to me, though, is the number of new listings. We are not listing anywhere near what we used to. We are listing about half of what we used to. December is a little bit quirky just because of the holidays. So, we're actually in line with where December's number of listing usually is. But if you look at the rest of the year, we listed about half as many homes as we did. So like May 2022, we listed 2,500 homes for sale. May 2023, we listed 1,500. So that's 1,000 homes less. And that's really kind of what's been causing our oscillation. I'll get a little bit more into that after I go over the stats here. The number of new listings is really what's kind of been causing our oscillation here. Total number of active inventory. So we're actually lower than we were in winter of 2022 to January 2023. We have about, looks like 1,000 fewer homes. We peaked at around 3,800 and we're at 2,900 currently. So, so we have less inventory than we did last year. So yeah, and you can see this big dip on the time to contract. That's a fun one to look at. Closed sales by sales price. I do like to dive into how the various price points are working, because the honest truth is $1 million home sells on a little different time frame than a $300,000 home. And that's primarily because buyer pool. There's fewer people that are able to and willing to spend $1.6 million on a house than there are people interested in buying a $300,000 house in the area. So total number of closed sales, 100 to 150,000 was up 75% to 14. It's surprising there was that many homes under 150,000, to be honest. 150 to 200,000 was up 46.7%, total of 22. 200 to 250,000 was down 20%, total of 24. 250 to 300,000 was down 32% to 61. 300 to 400,000 was down 26.5% to 275. And then 400 above is holding, not a lot of change up in that region. 400 to 600 was down only 9% to 294. 600 to a million was down 4.6% to 125. And a million or more was down 4.9% to 58. Median time to contract across the board is basically at about 30 to 40 days. A couple exceptions here. 200 to 250 was down 50% to 15. 250 to 300,000 was down 22.9% to 27. 300 to 400 is kind of wild. It's at 40 days, which is holding steady, 2.6% change compared to 2023. But everything's kind of hanging around this 30 to 40 day mark, really. Total number of new listings. The bad news is there really isn't much under 300,000 going up for sale. So we had a total of 13 homes in the $150,000 to $200,000 mark. We had 38 between 200 and 250. 250 to 300,000, we had a total of 66, and that's not a lot. That's just a little over 100 homes put up for sale under 300,000. So if you're looking under 300,000, single-family homes in Hillsborough County is pretty tough. Now, 300 to 400,000, we see a lot. A total of 459 homes went up for sale, which was an increase of 4.6%. 400 to 600 saw another 570 homes, which was 11.1% increase. And, the rest of the segments there kind of hung steady. Million or more, a total of 139, which was a 23% increase. And then total inventory, which is everything that was for sale, fewer and fewer below 300,000. All of those are down, so like 150 to 200,000, there was 55.6 fewer homes for sale compared to January 2023, which was a decrease of, dropped to 16. 200 to 250 was down 25.9%, total of 40. But from that 300 mark, held pretty steady. It was only down 5.6% to 746. 400 to 600,000 was up 7%, a total of 1,144 homes. Oof, man, if you're trying to figure out where the market is at, that's where it's at right now. 600 to a million was up 5.6% to 530, and a million or more was up 4.6% to 365. So them's the stats. So we need to do some analysis and some interpretation on this, because as it looks with these statistics, prices have been decreasing for the last 4, 5, 6 months. The thing that most of the online statistics article miss is the context. Sometimes when you're looking at statistics, you really have to back up and kind of look at the big picture here. If you look at just the numbers, you're like, oh, we're in a price slide, prices are dropping, the crash is here, basically. The problem is you got to pull back, you got to get the bird's eye view, and you have to take it all in and kind of see how each part's moving. Now, this was all very easy, relatively, before COVID, because the market was on a very steady march. It was going up 5 to 15% per year, steady march. Inventory was declining slightly, but not overwhelmingly so. So very straightforward, very predictable. Since COVID and since the June, July kind of interest rate spike and demand crash, things have been wild, right? So when COVID hit, I kept my eye on things. I saw inventory drastically start reducing, and I started waving flags. I was like, hey guys, we're going to have price craziness if this trend continues. It took another 6 months or so, but it did finally show up. Prices really started ramping up through 2021 and 2022. And then, the Fed raised their interest rates, and then demand really cratered from, the last half of 2022. And basically what we've had since then is we've kind of had this teeter-totter effect, right? And what's causing it, it's a two-part thing. So the number of homes that are going up for sale are a lot less than what we had been listing, right? There's a lot of reasons for that. People are buying and holding because they have very low interest rates. People owning investment properties, all of these kind of things kind of add up to fewer homes getting listed for sale. Now, normally, whenever you see the number of homes getting listed for sale being that much lower than usual, you would expect prices to really go up, which they did. Prices went up in 2023 and set new record median home prices despite interest rates being the highest that they had been in 20, 25 years. If you had told me a few years ago, Kyle, interest rates are going to touch 8%, where's demand and prices going to be? I would say demand's going to crater and prices are going to be in a strong decline. That's not what's happening. What's happening is we are having this teeter-totter. So what it is we have the natural ebb and flow of the real estate cycle, right? And it is affected by outside circumstances. So when interest rates go up, it does impact the number of buyers. The number of buyers go down. The thing is the number of new listings is so low that any shift in demand has an outsized impact on home price. If we were listing the same number of homes for sale that we were listing 3 years ago, prices would definitely be in a strong decline and we would definitely be in a buyer's market. Because inventory is still so low, we currently have very low demand. 1, because we're in wintertime. 2, because people still think that interest rates are, high 7s to 8s. As we get into springtime and people start thinking about making moves, which is the normal course of the real estate market, And as people realize that interest rates are down into the mid sixes, and I've even seen some fives here and there, and if it's like a VA loan or something. As people realize that interest rates aren't as terrible as they were, that demand is going to come back, but the number of new listings is probably going to stay the same. And so what I'm expecting to happen is basically what happened in 2023. Demand should come back in spring and summer. It's rapidly going to chew through the low number of new listings that are going up for sale. And that whenever you have demand and not a lot of houses, prices go up. So that's what happened in 2023. 2024 is looking like the same setup. The only thing I have not seen yet is demand coming back. But last year that didn't really hit until March's numbers. So I'm going to be paying attention to it over the next couple months to see how things shape up. Be sure to, check out those videos. Currently, it is a very outstanding time to buy. We have been able to negotiate major price reductions and repairs for buyers. And on the selling side, we can still get amazing prices compared to, the last 2-3 years. Because again, we set record home prices. My expectation, though, is that prices are going to climb as we go through the year here. And if we pull a little further out for a little further bird's eye view, the inventory is also hurt by the fact that we do not have a large number of new homes being constructed. And I know you're like, but I see people building everywhere. Basically what happened is during the 2007 financial crash, the number of new homes being built dropped by 80%. They fell off a cliff. And we have only recovered, it's been a couple months since I checked this, but the number of new home starts has only recovered to 1990s levels, which means that there is a low number of new homes being constructed to satisfy the demand. So the number of existing home sales is dropped, and the number of new construction is also low. And so that's going to keep inventory low for a long time. But again, check out my next few videos because that's really going to tell the tale, especially if demand comes back. So those are the real estate market statistics and analysis for the Tampa Bay area for February 2024. Thank you so much for tuning in and watching. If you have any comments or thoughts, if you've seen a large amount of recent, as in like the last 4 or 5 months of institutional buying, I would love to hear it. I haven't seen anything show up on public record for that. But again, it's not something I do a lot of in-depth diving on, but I have checked it in the past. And as far as I can tell, most of those types of institutional purchases kind of stopped in mid-2022. I saw a news story where the reporter was literally using 2022 information to try to describe the shape of the real estate market today, and that is not the way you do it. There has been so many changes in the real estate market since mid-2022 that you're really shooting yourself in the foot if you're trying to make any decisions based off that information. So far as just experience in the market, what demand usually does, and the number of homes that are currently for sale, everything's kind of shaping up for a repeat of 2023 in 2024, which means, low inventory, not a lot of homes for sale, and increasing home prices. It would be interesting if something different happens, but that's basically kind of the teeter-totter oscillation that we've been on since June, July 2022. So thank you so much again for tuning in. My name's Kyle Sasser, a realtor in the area. If you'd like help finding your own great home in the Tampa Bay area, I would love to help you out. You can reach me at 727-300-2111. There'll also be a link to our scheduler in the description down below. You can book a chat at a time that works best for you. If you're thinking about buying or selling, we do both. Also, check out the rest of my channel. We have some a little bit more of the nitty-gritty side of real estate and what you really need to be concerned with, more than the the glamorous videos of HGTV and other other things. Like if you really want to know what's going to impact you when it comes to real estate, check out some of my other videos. But again, thank you so much for watching. My name is Kyle Sasser, and I'll talk to you soon.